When it comes to index funds and ETFs, it is really the way that you are going to build an exceptional amount of wealth as well as mitigate a lot of risk with the ETFs that are over a couple different sectors and not really focused on specific stocks. Now, me personally, I don't buy any specific stocks in their entirety. I buy ETFs, which are essentially a bucket of stocks together, which is what we're going to be looking at today. Today's video, we're going to be looking at the Vanguard S&P 500 ETF, or the VOO, and the Spider S&P 500 ETF, which is the SPY. They are two of the most large popular ETFs that we see in the industry, which of course are indexed to that S&P 500. So we're going to go through, I want to break them down and show you exactly why I choose the VOO over the SPY. So what are they essentially? They are based on the S&P Index 500, the SPX, which as an index fund, each is a passive fund, meaning that it is one that you are going to set and you're going to forget. Now, the reason for this is it is not an actively managed ETF. There are not people that are assigned to it that actually go out and change the investments, change up the strategies. Every now and then they do kind of have a rebalance, but overall, it is really based on the S&P 500 index. So as the index changes, this ETF will change as well. Now, both of these do have a very similar performance, which we're going to look at in just a little bit, but they don't actively trade stocks. And with the fund, it is a very, again, kind of a passive fund. Now, both of them do have an incredibly low expense ratio, which is good, but this is where they do vary a little bit, which again, we're going to look at in just a little bit. Now, of course, the S&P 500 index represents the 500 largest or so, usually about 503, maybe 515 or so largest publicly traded companies in the United States. So if you're investing in either of these ETFs, you are investing into the United States large cap funds. You are not investing in foreign entities, nothing overseas. It is solely based in the United States. And because of this, this is some of the largest companies. Now, thinking big picture, when we look at the economy and when you actually look at the stock market in the United States, it is roughly 50% of the global economy, which is kind of crazy to think that we have such a big chunk. But overall, we are still growing, and within the last couple of years, actually doing incredibly well as an economy, even though things I believe are going to change coming up this year. But of course, each company is held within this index is represented by one of a 500 share. This is why it makes up the S&P 500, one company. And of course, there are 500 in these. Instead of this, the company is represented with an index based on the total market value. This is important to remember when it comes to these ETFs, because the market value is going to be based on the stocks. And again, when you start getting into kind of the breakdown of this, you're going to see exactly what I'm talking about. So the S&P 500 is the cornerstone in most portfolios. This is kind of a base. When you think of something that everybody could hold, including Warren Buffett, that says everybody should hold the S&P 500 or the VOO from Vanguard because of the incredibly low expense ratio. This is the index that is the most accurate barometer of the overall stock market in its entirety. So you are literally buying the S&P 500 and buying the overall accuracy of the stock market in its really purest form. And of course, as companies grow exponentially, as we see them shrink, they can actually change out of here. Now, of course, when you look at the VOO, we're going to do kind of a side-by-side comparison of both of these, the SPY and the VOO, so you can really see it. So let's hop over and we'll take a look at these. All right, guys, so if you've ever used ETF.com, this does side-by-side ETF comparisons, which I really do love. And I'm going to show you exactly why I invest in the VOO versus the SPY and really breaking this down. So you can see going through at the very basis, they are very similar. Now the SPY has been out about 7 more years than the VOO, but overall you can see 508 to 467, which I believe that is billions of dollars that they are carrying within there. Now the big thing that I want to note is right here. When it comes to these expense ratios, this is one of the determining factors. Now, of course, 0.09 means you're paying $9 for every $10,000 that you have invested, and that is on an annual basis. When you look at the VOO, it is 0.03, meaning you're spending $3 every single year to go ahead and buy this for every $10,000. Now, of course, doesn't seem like a lot, but when you think about it mathematically, this is where it gets incredibly interesting. So essentially the expense ratio of the SPY is 3 times higher than we see with the VOO. Now, of course, if you got $10,000, okay, it's a couple bucks. If you have $100,000, okay, now there's a pretty dramatic difference in there. When you start getting into millions of dollars, there's a really clear-cut difference. And then when you look at the overall ability or what they have invested, when you get to billions or when you get to hundreds of billions of dollars, the expense ratios just really go parabolic at that point. And really, again, kind of crazy to think with an expense difference or expense ratio that is so small, it makes a big difference when you start getting into those larger numbers. Now looking here, assets under management, 505 billion, 429. So the VOO is a little bit smaller. And then of course, they both track the exact same index. Number of holdings right now is 504, which I don't know why it doesn't show for Vanguard, but overall they have the exact same. So it is 503 or 504 at any given time that we are holding within that ETF. Now looking at the performance, this again, you're going to see almost a mirror. Even looking at the line here, they are literally tracking the exact same identical index. However, you'll see that over a 3-month period, you can see right here, the SPY is doing a little bit better, performing a little bit better, and of course, tied to the exact same index. When you start going out a little bit further, you can see the VOO on the 3-year performs better, even on the 1 year, the 3-year, the 5-year, the 10-year. It performs better. Now, of course, this is because of the expense ratio. So again, when you start looking at the growth factor in here and looking at the cost, this is really indicative when you start getting into these larger numbers where the VOO is edging out essentially the SPY because of the expense ratio that they offer, which is of course a third less than what we see just kind of based on their performance. Now, of course, the cost, this is what we were kind of talking about. And then, of course, the trading volume, a lot of trading volume right here with the SPY. And again, around 540 holdings to each. But this is where it gets very interesting is when you actually get into the holdings. Now, you can see with the SPY, even the top 10 holdings, there is just about the exact same breakdown. But it's interesting to see that the breakdown is not identical, even though they are tracking the exact same index. So even here where SPY has Microsoft at 7.32, they are holding Microsoft just under 7. Now Apple is 6.49. Here we're holding Apple at 7.02. So I mean, we have almost 0.5% more in Apple where we're cutting what, about a 0.35 out of Microsoft. So again, even though they're tracking the exact same identical index, their holdings are not identical. And even when you start getting into Meta, 1.96 over here with Meta, which I'm not even sure, I'm not even showing Meta in here. Oh, there we go, Meta right there, 2.47. So again, it's a big difference. I mean, that's over half or over 0.25% or a 0.5%, 0.5%, that we're seeing the holdings again kind of varying a little bit, which is kind of interesting on the dynamics on how these companies are performing. Even looking here, the SPY has a very heavy stake in Nvidia, 4.23, where here it's a 3.05. So again, over a full percent with Nvidia going into the SPY. Now, of course, this could be kind of contributed to the growth factors, but overall, if they do the rebalance, if they do any of the adjustments, but you can see where the VOO and the SPY, even though they are tracking the exact same identical index, it is not, again, really mirrored, because if it was completely mirrored with both of these, you would see the exact same kind of breakout. Now, of course, the sector you kind of get into as well. And you can see, again, even though they're tracking the same identical index, and you can see this one has actually been updated for 24. This is 327, but this might be a little bit of the variance in here and why we're kind of seeing it. But looking at technology, the VOO at this point in time had a little bit higher. Even looking electronic technology, a little bit higher. And of course, going through, they're pretty similar, even a little bit more of a health technology over in the VOO. So it's kind of the breakup in the breakdown of how they're going. And again, this might update on 424, which again is when the SPY actually reported and changed. But when you look at the reason, and again, I get this question quite a bit, why do I hold the VOO and not holding the SPY? Or why do I not buy the SPY instead of holding the VOO? It comes down to this right here, guys, and it is the expense ratio. Like I said, when you get 10,000 in there, great. When you get 100,000 in there, now you're starting to see a little divergent in there. When you start getting hundreds of thousands or even millions of dollars in there, This divergent can be great with the expense ratio, which of course can hurt exactly how the fund's performance is just based on the breakdown on here. So overall, both of these funds, incredibly good to hold. Now, the funny thing is, again, when I think of Warren Buffett and he says that everyone should hold the Vanguard, the VOO, the Vanguard 500 index fund, the VOO was always my choice long before I even heard that from Warren Buffett. And overall, do your research before you get into investing. But he didn't come out and say you should invest in the SPY. That is what you should be holding. He said you should come out and you should be investing in the VOO, which is exactly what we do. And we do hold in 25% of my personal portfolio is in the Vanguard 500 index fund, which is performing exceptionally well. So, all right, guys, so that is going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.